ICICI Securities earnings in Q1 reflect that the company is prospering in the pandemic period, as we had alluded earlier this month in one of our research reports. Now, in our ideas for profit today, I'll look at the earnings fine print of the company and find out what is the outlook going forward from here. Well, if you see, the company appears to be a bright spot amidst the pandemic because we've seen it flourishing. Its net profit increased by a whopping 70% on a year-on-year basis in Q1, and that was really aided by a solid growth in the brokerage business. That was partly offset and by the muted performance, say, in the distribution segment, however, but the retail trading in financial markets has really taken a quantum leap during the pandemic period. That's globally, not in India. Now, millions of new demat and brokerage accounts have been opened during the lockdown. Retail participation in equity markets has really zoomed in the quarter. Also, if you really see, ICICI Securities, the second largest broker in the country, has been the big beneficiary of this trend as well. Now, but the rising trading volumes aren't the only reasons why it is prompting us to really look at this stock for a long-term perspective. The virus has probably disrupted businesses and damaged the financial standings of many companies. ICICI Securities, however, is well placed with the low balance sheet risk right now. In contrast to banks and NBFCs, which have low credit and NPA risk, there is no additional capital needs for this business growth as well. Unlike many other companies, it has virtually no inventory or supply chain risk as well. Now, it generates a high return on equity and also consequently pays good dividends as well. Now, the company has turned out to be a relatively safer stock in financial segment, as its business not only remains unaffected by the pandemic, but on the contrary, like I said earlier, is flourishing. Now, the revenue from equity broking and the allied businesses increased by 62% on a year-on-year basis in Q1. The brokerage also added 80,000 new clients in Q1, taking the total client base to above 40.9 lakh. Now, the customer acquisition was a tad lower in Q1, and that was because it moved to completely digital account opening process, which was ready only towards the end of April. Now, the company's market share also increased to 10.7% as at the end of June, which is an improvement of, say, 260 basis points year on year. Now, the equity allied businesses saw revenue growth of 31% on a year-on-year basis. It also added around 65,000 customers on Prime platform in Q1, taking the total Prime customers to 3.75 lakh. Now, ICICI continues to improve its product offerings to tap new customers and also the market segments. Recently, as a major initiative, it also allowed the non-ICICI bank account holders to trade on its broking platform, that's iDirect, to target the non-ICICI bank customers. Now, the management also plans to add an option of investing in stocks listed on the US stock exchanges, and that is through iDirect as well. Now, revenue growth in the issuer services and advisory business doubled as compared to the previous quarter. That was again a positive. ICICI's cost to income ratio also improved to 53%, which is a reduction of 300 basis points year on year. Now, the management has also initiated several measures along with digital initiatives that should really help in reducing the operating costs for the company. Revenue from distribution of mutual funds and also the other financial products, they were muted in the quarter. So we need to see that mutual fund assets declined due to huge redemption in the debt funds triggered by closure of schemes by, say, Franklin Templeton that we've already talked to you about earlier. Now, however, ICICI improved its net flows and market shares in equity funds. We do see strong earnings growth in the medium term that is going to be driven by cost savings. Now, in the long run, the company is well positioned to benefit from the favorable trends like increasing share of the financial savings and rising equity market capitalization as well. However, investors should note that ICICI's business is dependent on capital markets and hence is inherently cyclical. Now, though the stock has already surged 64% in just the past 3 months, earnings have also accelerated in the same manner. Now, the stock is trading at 24 times FY22 estimated earnings. Though valuations right now appear quite full, the stock price can definitely move up in tandem with the equity markets given the stellar earnings and also the favorable sectoral trend. So, long-term investors wanting to play the capital market story can definitely go and buy ICICI Securities on dips from here.